Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Burt Reynolds there, or Burt the Hurt over here in Lanny, the DD guys. And today we're talking to you guys about a Dividend King, about is it the best time right now to buy this Dividend King stock while the yield is over 3% with 60 plus years of dividend growth.
Baby, smash that subscribe button. Give this video a good old-fashioned thumbs up. Let's freaking go, everybody. It's time to talk about dividend growth. It's time for us to get our money off the sidelines into high-quality dividend growth stocks, grow that passive income stream so we can all reach financial freedom together. That's what,
Guys, second video here. Recording this Sunday night, the night of the 17th. So stock prices will be as of the 15th. But let us know what you guys think of Bert's mustache here. Should he keep it? Should it stay or should it go? Should it stay
yeah.
or should it go? I mean, almost to heck with this dividend analysis. We need to focus on this stash right now.
Remember, you're not convincing me. You're convincing my wife why this needs to be a long-term
Well,
investment here. That's
all a couple thousand views on this video is going to be from Bert's wife because she's going to be waiting for that feedback.
That's right. All right, everybody. So it's time to get a Dividend King into the scene. We've talked about this company, Lanny. We were joking around about this before. We've talked about this company, but I don't think we've ever talked about this company individually and taken time to peel back the layers on this stock in its own special video.
We really haven't, guys. We're talking about the Warren Buffett, the long-term big-time investor. Yes, Buffett. We usually don't bring him up too much on this channel, but we're talking about one of his first massive stock positions, which is Coca-Cola, ticker symbol KO, good old Coke, guys. And Coke actually usually falls behind Pepsi, usually has a very high price to earnings ratio. But guys, they're down about 8% this year. They've started acquiring and filling up some of their brand pipelines. The biggest, most recent one, somebody can let me know if it's not, but it was the Costa Coffee that they, had been putting out there internationally, as well as kind of taking over Fairlife Milk. I know Fairlife, anytime we actually do opt to drink milk in our house, which is rare because we do non-dairy, but we do go get the Fairlife milk. Body Armor was a big position that they ended up, I think, just taking the whole thing of Body Armor recently. And then obviously they're involved with some ventures with the alcohol companies with Topo Chico and the Simply brand.
Yeah, I mean, they're everywhere too. And let's not forget about their big time, their legacy ones too. Coca-Cola, obviously, Barks, Fanta, Fresca, and Sprite, which is in Dasani water, Smart. So they have a lot of great legacy. So you're talking about these huge acquisitions and these huge brands they're expanding into, but they have this stable base of cash flow generating kings in their own right within their sector. I mean, look, let's not to knock on Pepsi here, but you don't see Sprite rebranding Sprite. Pepsi had to rebrand Sierra Mist into Starry to try and help it gain some market share there. So for every reason why you like Pepsi, you have to remember too, Coca-Cola is this huge international brand that is established, that is just a market leader too.
Yeah, correct. Obviously, their Powerade is always second to Gatorade,
Sure.
so let's
Yes.
we know that.
Yeah, and there's ones within too. I mean, obviously they go toe to toe, but it's not as if they're slouching either. It's not as if we're saying like, hey, you need to go get Keurig Dr. Pepper because they're awesome brands to go against Coke and Pepsi.
Right. And guys, and Bert, the community I know wants to know how are they doing financially. Well, based on that last earnings release in July, for that second quarter, everything right now is up. Operating margins are up, revenue is up, EPS was way up, cash flow is up. Everything is looking very strong. Current ratio on the balance sheet also looks very sound with an over 1x current ratio, which is what we always want to see at 1.14. The only little problem that we see there is within their liability section is that the loans and notes that are due, I think, less than 1 year are up about 2.5 billion. So they will have to be making or refinancing some payments here. But long-term debt is down just under 1 billion.
Yeah, so interest expense may increase here slightly on those notes that they're going to be refinancing, but current ratio is great, cash flow is great. You can absorb some extra interest expense in the short term while you're taking on the long-term debt before you refinance them in the future when interest rates come down.
I know it's funny too, and I don't know about you, Bert, if you've had to pick up any Coke brands recently, but obviously prices are
Yes.
higher at the stores, first off. And then it's funny, like on Twofold, do you guys remember like those little tiny cans? They were about 8 ounces.
Yeah.
I'm pretty darn sure when I picked some up for a recent birthday party because they wanted them at the party, they're 7.5 ounces now.
Oh, they cut those down?
I think they cut. Let me know in the comments if
Yeah.
that's true. They went from 8 to 7.5 ounces
Hmm.
on the can.
It wouldn't surprise me. On a off tangent, those always make me think of my late grandma because she always used to have those at her house. But she always had the tiny cans, and I'd always tell her the joke that because she was tiny, she was like 4'10", so I'd always just tell her
Oh,
like, "Oh, you bought your sized cans at the store today."
oh, you should see when I like hold one of those things. It's like,
You look like Andre the Giant holding a
yeah,
beer can.
yeah,
That's what you look.
holding a. So, but let us know. I'm
Yeah.
curious there if I'm the only one or if I'm full of shit. So let us know there, guys.
Wouldn't surprise me. That is the least surprising thing you can say. That could be speculation or not, but that would I would bet the farm on that.
Could we see the 12-ounce traditional can go down to 11 ounces?
Hmm. All right. So what are we going to do now? We've gone through their earnings. We're going to run them through our stock screener. We're going to focus on three metrics and a bonus metric: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing their dividends. And we're going to talk to them about the freaking dividend yield, everybody. Let's effing go. Let's run Coke through this screener.
All right, guys, we're going through the gauntlet with Coca-Cola. Make some noise, guys. Ticker symbol is KO, the big knockout punch. You're trading at $57.94. Using the forward EPS of 2024, since we're almost done with 2023, is $2.82. That leads to a forward price to earnings ratio of actually less than 21x, at 20.55, which is actually low for Coke, as Bert and I we were talking, and slightly
Yeah.
lower than the S&P 500.
Yeah, and I always mentally have Coke at the 23 to 25 PE ratio. So seeing them at 20.55 is very, very interesting. I'm not going to lie.
Yeah. Now, what about that dividend payout ratio, though, Chico?
Not bad. Annual dividends $1.84. That's a payout ratio of 65%.
Hmm.
Hmm.
A little bit above that 60% range that we'd like to see. Obviously, Coke will bend hell over high water to make sure they keep increasing that dividend. We've actually seen it a lot higher as well. I think
Hmm.
even in the 70s for a few years, even close to 80%, I want to say at one point in time, which obviously does domino into the dividend growth rate, guys. Even though they're a dividend king, Bert, at 60 plus years of growing dividends, what has that dividend growth been like for the KO?
It's not great. It's 3.40%. So that's been one of the knocks here we've had against Coca-Cola lately.
I think recently, if I look through the history, they did recently go from 44 to 46 cents, which, that's a 4.5% increase.
Mhm.
So a
Yeah.
little bit better than average.
If you had to compare this to their can size, we're not talking their full size cans from the dividend growth. We're talking about those little 8-ounce cans, 7.5-ounce cans that you talked about. Those are the size of their dividend increases lately here. So that's what we've been working with.
Yeah. So last increase or two have been higher than the average. So, we'll see if it gets closer to that 4 to 5% versus 3.4%. But the dividend yield, because the stock's down 8% and they increased their dividend this year, that yield is actually over 3% at 3.18% for Coke.
Interesting. It's comfortably over 3% too.
Yeah, I would say very much so. It's not like 3.01.
Yeah, where by the time of the video it might be at like 2.9%. Like that's nice for
Yeah.
Coca-Cola. This has been a very positive, eye-opening screener here for Coca-Cola. I'm not gonna lie.
And for reference, I think what's Pepsi? They're at like 2.8% on the dividend yield.
Hmm. This is great. I mean, it's been fun running them through the screener. So let's summarize them here. PE is 20.5, payout 65%, 5-year growth is 3.4%. They've increased for 60 years with a yield of 3.18%. Laney, what are your thoughts here about the Dividend King?
No, I'm still thinking about that darn half ounce that they got rid of. No, but
You can't let that go, can you?
you know
What
me,
pisses you off more, that extra half ounce or trying to figure out the dividend growth rate for international companies?
trying to figure out the price per ounce that we all pay now versus when they were 8 ounces. I need to figure that out. But we own Coke in my wife's portfolio. We own Pepsi in my portfolio, and it might be a. I need to go back to when we first started buying Coke and compare the metrics then, because I'm curious what the yield and growth was at the time I started buying it for my wife and now, because it could be a good time to buy this Dividend King because they can pass on increases during these time periods and people still drink their Coke products.
Yeah, and that's a great point. And that's from my standpoint with Coke. Uh it's been very interesting. I've had a few positions like that I just want to kind of get rid of. And this might not be a bad one to just start slap in a legacy company here, at least for myself. But now, so that's what's interesting here. I don't know. This has been what I keep saying. It's been eye opening for me. So
Oh
it's
man.
a spot on the watch list. But taking a step back, let's take myself out of this too. If you are a beginner investor and you're just looking for a high quality, great dividend stock that has great brands, has a history of increasing dividends, I don't think this is a bad time to consider Coca-Cola being one of those first purchases that you're doing to start that investing journey.
Guys, let us know if you think Coke is a great stock right now to buy based on the current metrics. Again, let me know your feedback on the 7.5 ounce can. Let us know about Bert's mustache as well in the comments below. What do you guys think of the Dividend King Coca-Cola KO, the Warren Buffett stock?
If you haven't already, subscribe to the channel, give this video a thumbs up, and Lanny, what do we have to tell these people out there?
No Shave November, all the guys. No, guys, if you're not with us, you're against us, Jack. And that was Bert, the Hurt, and Lanny from the DD. Over and out.